Recently, I've noticed a fair few people saying that the Volkswagen Group and German car manufacturers are definitely catching up to Tesla. In fact, that this year is the year when they've been proving Tesla doesn't really have an advantage. However, some pretty big sections of the media categorically disagree with those claims. Here's what they have to say. In fact, they believe Tesla is extending its lead. Hello, my friends. Welcome to the channel. I'm the Electric Viking. My name is Sam Evans. Great to have all you new subscribers. Welcome back to everyone else. Fortune said that Germany's automakers announced bold plans in the last few years to shift to electric cars and challenge Tesla's dominance. Instead, they're only falling further behind. Is this actually true? Now, if you were to believe the people who say that they're selling their Teslas because they hate Elon Musk, and there's a lot of them, then you would think that German automakers were actually improving their situation. I mean, after all, they're bringing lots of electric car models to market. Their sales in some instances have increased. And therefore, they must be catching up to Tesla, surely. Well, actually, not quite true. Tesla delivered 890,000 cars in the first half of this year. That's more electric vehicles than the Volkswagen Group, the BMW Group, not just brands, but the groups, Mercedes-Benz Group, and the Porsche Group combined. The Germans are struggling as software issues have delayed key models. Fortune says that the Germans are struggling as software is delaying key models, and that's contributing to waning sales. In China, their biggest market, where Tesla and local brand BYD have raced ahead, they're even playing second fiddle in their home market, where Tesla remains the top EV brand. Investors will hear from 3 of these German companies this week, with Porsche reporting quarterly earnings Wednesday, followed by Mercedes and Volkswagen on Thursday. However, it's worth pointing out that we do know Volkswagen has paused EV production at their biggest EV factory, and they've laid off 30% of their workforce. They have said that there's massive problems in their car business, and they've just bought an electric car platform from XPeng. They bought an ownership stake, a percentage of XPeng. They've decided to use SAIC EV platform. SAIC is a Chinese government-owned manufacturer of cars in China. Those cars, of course, will be manufactured in China and therefore shipped all around the world. Clearly, the reason for this is Volkswagen cancelled the Trinity project, their next electric vehicle platform, and they decided to use electric car platforms made in China. They're using XPeng's old first generation platform, and this seems to be a bit of a backward step, some would say. As Tesla pushes for more volume with aggressive price cuts, it's being critiqued, and a lot of people are saying it therefore has to be struggling. But it is still making a profit on EVs. And that's not something that the German competition can say the same. Tesla are dialing up the pressure on legacy automakers that are struggling to keep pace. Tesla's EV sales increased by 30 percentage points, more than Volkswagen's in the 3 months that ended in June. What that means is Tesla has actually widened its lead. While the Germans are mired in difficult talks with unions about retooling their combustion-era production sites, unions in Germany are very concerned that tens of thousands, if not hundreds of thousands of job losses are imminent if German manufacturers switch to making EVs. Tesla plans to expand instead its German factory. It wants to double the size, produce twice as many electric cars from that factory, and to build a new plant in Mexico. However, in Germany, it wants to double its production numbers. That is aggressive. That's a very aggressive strategy. Tesla is still miles ahead of the German car makers in all major markets, said Matthias Schmidt, an auto analyst based near Hamburg. They're under pressure to boost volumes to reach the kind of economies of scale needed to make EVs profitable. That's the point. Profitability. That's elusive when it comes to electric cars. Germany's automakers thrived in the past because they've perfected the production of vehicles running on gasoline and diesel, with hundreds of high-quality local parts makers supplying them with gearboxes, fuel injectors, crankshafts, everything you need to go into a modern German engine. Now that the battery is taking over, their Vorsprung durch Technik has evaporated. Their advantages have disappeared. And they've even admitted as much themselves. Now the German automotive market actually gets a very large number of parts, products, and batteries that it uses in its cars that are made in Germany from China. In Europe's biggest economy, inflationary pressures, a dearth of skilled workers, and high energy prices are adding to the structural challenges posed by the EV shift. German automakers' expectations are at their worst since the 2008 financial crisis, according to a survey from the Munich-based Ito Institute published this month. Basically, the survey says that these German automakers think that they're in for a very bumpy ride, and that's to really understate things. The Germans' biggest threat is their weakening position, though, in China. Volkswagen, BMW, and Mercedes dominated combustion car sales in the world's biggest auto market for decades, making approximately half their profits worldwide from China. But recently they've fallen behind Chinese brands that have been better at churning out affordable EVs and high-end EVs with technology and software geared towards local tastes. And of course, the impression is that German automakers are sort of the old guard. They don't really do EVs. It's the Chinese who do EVs. At least that's what its citizens believe, along with Tesla. Mercedes slashed the prices of its cars in China for its flagship electric sedan, the EQS, late last year after disappointing sales and recalls of its EVs, which left a sour taste in customers' mouths. And really, the Mercedes brand as an EV manufacturer in China, it's not really up there with other premium EV makers. Volkswagen in particular has come under pressure, with BYD outselling the company in China for the first time this year. The German manufacturer's EV sales in China actually slowed down in the first half in a market that grew 20%. So the EV market in China is up 20%. Volkswagen's EV sales are down 20%. And that is in spite of the fact that the Volkswagen Group have invested billions of dollars into a brand new EV manufacturing plant that went online last year. Demand for their EVs are expected to make up 90% of the Chinese market by 2030. They already make up 35%, adding urgency for the Germans to accelerate more competitive EV offerings. Now they've said that they will respond in China. They say that they will actually invest a lot of money to catch back up. Europe's biggest automaker last month replaced the CEO of Audi, partly because it wants to help the brand slide in China. Basically, it's blaming Audi's CEO for the company's slow sales in the country. The current EV leaders in China will tighten their grip on the market, analysts from HSBC said in a report this month. They're basically saying it's too late for the Germans. With the exception of Tesla, we think they will all be behind Chinese EV brands. All is not lost, says Fortune. Elon Musk has left open a window of opportunity for incumbents looking to catch up, having launched his last new passenger vehicle, the Model Y, in 2020. Tesla hasn't redesigned the Model 3 since it went in production 6 years ago, though a brand new model is about to be on sale and released in China within the next 6 weeks. That will probably give Tesla a bit of a boost on its EV sales this year. There's also a new version of the Model Y coming out by January called Project Juniper. There's going to be some big changes in those cars, bigger battery packs, higher energy density, probably going to get a lot more range out of those vehicles based on reports that I've been reading, and about the same price is what customers will pay. So how will the German car makers respond to that? That will mean Tesla will have industry-leading range by a fairly large margin in cars that have been updated, refreshed with a new sensor suite, 11 5-megapixel cameras, new computers, new battery technology. That's going to be tough for them to actually respond to. BYD is steering clear of the US market because of trade barriers, and several smaller Chinese EV startups are not likely to survive the price war in China. I mean, there is 80 electric car brands in China, and most of them are selling at a loss. That's what the Germans have to compete with. The German companies still generate healthy profits selling internal combustion engine vehicles, including in China. But those sales are a declining, shrinking market. Mercedes and BMW aren't following Tesla out of premium price segments and are still roughly doubling EV sales year over year, but from a very small base. Plans by the Germans to introduce EV-focused platforms around the middle of the decade to lower the cost of their electric cars and equip them with new technology could give them a bit of a catch-up. But whether or not they can catch up completely, I would say is extremely unlikely because of the fact that they're, well, by the time those new platforms do come out in 2025 or 2026, other competitors like Tesla and BMW will have their own new platforms as well. Volkswagen is readying a compact EV priced at less than $25,000. They say it's a people's car for the electric age. However, that's years away from production. Europe's largest car maker recently bolstered its rolling 5-year spending plan to 180 billion euros, more than $200 billion. They already have $185 billion in debt. This would make them the most indebted company in the history of mankind. 2/3 of that spend, they say, will go to software and to electric cars. Its ID7 sedan will hit showrooms later this year with an augmented reality display that beams information into the driver's field of vision. Volkswagen is hoping this will help revive its flagging EV sales in Europe. I'm not convinced. The ID7 is not really a part of the new modern world. I mean, when I say that, sure, there's some people that will buy it, but the truth is the growing segments are SUVs, crossovers, and smaller versions of crossovers and larger versions of anything that's a crossover or perceived to be an SUV. Those are the segments that are growing. Sedan sales are shrinking. Mercedes will introduce an electric version of its compact CLA sedan in the US next year to better compete with the Tesla Model 3. That's according to Automotive News report, and it's also electrifying the iconic G-Wagon. G-Wagon sales would do very well. There's not much to compete with for Volkswagen in the G-Wagon segment. But the CLA will have some very tough competition with a new Tesla Model 3 and a range of other EVs in that price segment already that are struggling to sell. BMW is betting its new class underpinnings due to arrive in 2025 will help accelerate sales. It's investing billions of dollars into making batteries and EVs with its joint partners in the United States. The manufacturer aims to cut battery costs by half and increase range and charging speed by 30% compared to its current models. To do so, it plans on manufacturing with a joint partner Tesla-like 4680 cylindrical battery cells, but those won't start production for a number of years. The next generation EV platforms from the Germans could change things, said Bloomberg intelligence analyst Michael Dean. That's when you'll see a big push from them, also in China. But the question is, will it be too late? How much market share will they have lost by then? As I said at the start of this video, when it comes to outright sales, Tesla is dominating the competition in Germany. Now, yes, there are certainly areas and regions where the German competitors are, outselling Tesla. But on a global perspective, Tesla is many years ahead. And it doesn't appear that years ahead gap is actually shrinking. If anything, it's growing. Now, yes, having more models is important. Very, very important. And Tesla should have 2 new models available within the next 24 months. In addition to those 2 models, which I believe are the Model 2 crossover and hatchback, it should also have new versions of Model Y and the Model 3, giving it 4 models plus the Cybertruck to better compete with some of its rivals. My point for a long time is this: you don't need 75 plus models to compete. That just confuses customers. Now, I could be wrong though. What are your thoughts? Let me know in the comments. Thanks for watching.